So, yes, you can have it all. Hi, I'm John McNeil, and this is the Invest Strong Network. Welcome. So, the great dichotomy of our time, and in fact, in most times, is you have to make a choice when you're investing. Do you go for the fast growing, high tech stocks that are blowing the numbers off the page and presenting you with an opportunity for massive capital gains at the expense of not paying a dividend? Or you could invest in dividend paying stocks, which are normally industrial stocks with some age on them, and they're usually much slower growers. And um, you just kind of have to settle for that less growth, less technology, but you get dividend income out of the deal. That's your choice. But in fact, in our time, you can have the best of both worlds. And in this vid, I'm going to mention 6 stocks that will give you exactly that. All right, let's get right into it. The first stock that I want to mention is Broadcom Inc. That's ticker symbol AVGO. So Broadcom shares are trading hands at about $508 a share as of this taping. And Broadcom as a company makes semiconductors for cloud-based businesses, also mainframe computer tech companies, and the telecommunications industry. Broadcom has grown remarkably in the last 25 years or so. And in fact, Broadcom, if you had invested in the shares at any point along that period, you would have done much, much better than the broader market returns. And even with that, and being in this incredibly growing sector of the economy with state of the art technology, Broadcom pays a 2.9% dividend uh, on the shares, right? Can't beat that. All right. Now, the second company I want to talk about is actually in a similar frame. It is a Qualcomm, and that's ticker symbol QCOM. Qualcomm shares currently trade hands at about $138 a share. Qualcomm produces semiconductors for the telecommunications industry, a growing industry if there ever was one. The shares currently yield a solid 2% above market, the broader market average for dividend yield. And the shares have grown stunningly over the last 25 years, right? Again, much faster and much faster than the broader market with a total return, depending upon what period of time you begin counting it, at anywhere between double or even triple the market average. All right. Now, the third company I want to call your attention to, a little outside of the pure technology sector, but still within the greater technology universe. We're talking Verizon Communications, ticker symbol VZ. Of course, Verizon, a mammoth telecommunications company, mobile, landlines, data transfer. Really, Verizon does it all. And they use state of the art technology. Of course, they would have to, being in the telecommunications industry. Their shares currently trade hands at $54 a share, and they have a stunning dividend yield of 4.70%. Now, Verizon has not grown, the share price that is, has not grown anywhere near the rapidity of Qualcomm or Broadcom, but they've done actually pretty good. And when you throw the dividend yield in there over the last 25 years, Verizon has been a stunning performer writ large. All right. The fourth company I want to call your attention to is Oracle Systems, ticker symbol ORCL. Now, Oracle shares currently trade hands at about $88 a share. Oracle produces enterprise software for corporations and also cloud services they provide for enterprises, companies. Their shares have a dividend yield of 1.5%, which is actually above the S&P 500. And over the last quarter century, Oracle shares have grown very, very rapidly. And if you had held the shares anywhere from the late 1990s until today, you would have doubled, tripled, quadrupled even the market return, depending upon when you acquired the shares compared to the broader market. All right. Now, I want to call your attention to the fifth company, which is Microsoft. Microsoft ticker symbol MSFT. Now, Microsoft's, of course, the shares are trading at roughly $304 a share. They make software and also provide cloud services. Now, their dividend yield is actually not that high at less than 1%. But then when you combine that dividend yield with the overall growth potential of the shares writ large, you have a stunning performer over the last decade and really even over the last quarter century, if you want to go back that far. Now, an interesting thing about Microsoft is that actually the shares lay fairly flat for about a decade of time between the early 2000s and the middle 2010s. Now, since then, however, the share price has sprinted much, much higher and has certainly outpaced the broader market. So if in fact you had held the shares through the entire period, you would have done very, very well. And the modicum of dividend that the shares pay is really a sweetener for owning the shares. All right. Now, the sixth company and final that I want to call your attention to, you're probably familiar with it, IBM, International Business Machines, ticker symbol IBM. Now, I already hear people saying, but Brother John, IBM shares have done nothing over the last decade. Well, two things. First of all, like Microsoft, IBM has had a period where the share price has not performed equivalent to its peer group or even the market in general. So that may seem disappointing in and of itself. However, again, just like Microsoft, at any point, investors can become familiar with the potential of IBM and the shares can sprint higher. So that's number one. Number two, if you only take the share price, yes, IBM has certainly been a laggard. However, if you include the dividend yield and you look at the overall total return of the shares over the last decade, then its total return begins to look much closer to the overall market return. And IBM is currently trading hands at about $137 a share. Of course, they make mainframe computers. That's the legacy business. But they also produce technology and equipment for blockchain, right? And the blockchain hardware will certainly be very much in demand as these cryptocurrencies really begin to grow and proliferate around the globe. And IBM has a dividend yield of nearly 5%. 5%. That is stunning, right? And so this gives you the technology, the growth, and the dividend. All right. So those are my thoughts. And the good news is about these particular issues. If you had owned them in any combination over the last 25 years, you would have anywhere from doubled to quintupled the market return over that same period, depending upon when you acquired them and what combination you had. But the party is not over. You can absolutely still acquire the shares of any of these in combination or individual and do very, very well. Indeed, have the best of both worlds going forward. All right. So, again, those are my thoughts for this week. If you appreciate it, hit that thumbs up button. I would appreciate it. Thank you so much. Also, leave a comment. Let me know if there are best of both world stocks out there that you're familiar with. Love to hear them. I'll include them in a future vid, I promise. And of course, subscribe. You have to subscribe to Invest Strong. I'd appreciate it. All right. Thank you so much and good blessings.